Hello everyone, welcome to Global Online. The student who are preparing for NTA UGC NET June 2024 cycle, this video going to be very much useful for those students, because in this video we are covering all the unit number 10 of income tax and corporate tax, and actually we are revising with the PYQs and MCQs whole syllabus of this unit. Okay, and this is a part 1. We are also upcoming video will also be going to be upload in very soon, so stay tuned with us, and I'm sure that you will get a 100% from this video. Okay, so tune with me till the last end. And before start our session, I'm just quickly tell you about the global online. So our new batches has been started from the today, that is 27th of the Monday, and here you will get complete course on commerce and management, daily live lectures, recorded lectures is also available, complete PYQs with the PDF format. Okay, and a full syllabus mock test, more than 4,000 MCQ series with detailed explanation, PYQs with a detailed explanation, and here you will get paper 1 is free of cost if you register yourself for the paper 2. And Global Online provide you the 20% discount on these on the fees, so that in this amount you will get paper 1 plus paper 2. Okay, and the contact number is given in your screen, so get in touch with this contact number for more detail. How to download the Global Online? Just go to Google Play Store, search the Global Online, then install the Global Online. Then you have to, after installation, you have to register with your mobile number and go to my course and search the whatever course you want and register yourself. After registration, you will get all the recorded video, all the materials in a very systematic PDF format. Okay, uh let's start with our first question of today. That is, the statement is given in in this question. The statement number 1 is about the gratuity received by the government employee in the exempted from the under the section of 1010 of Indian Income Tax Act 1961. Second statement is given that gratuity received by local authority. Okay, employee is exempted from the tax. So what will be the right answer for this question? The options is given below. That is, both the statement A and B is true. Both the statement are false. Both the statements are first statement is correct and second is false. And the fourth one, that is the statement 1 is correct incorrect and the statement 2 is true. Okay, so first, we have to see the right answer. That is, option number 1 is the right answer here. Now, let's understand the concept of the gratuity. So, gratuity is given, that is the exemption. Actually, gratuity is an exemption which is given under the section 10, clause 10. Okay, so in the exemption, we cannot say the subsection. We say section either 10 or the 10 clause 10, like this. Okay, so the gratuity, if the gratuity is divided in two parts, there are the two part. The first that is received during the service. If the gratuity is received during the service, the full taxable, then it will be full taxable. If the gratuity yeah, is received on the retirement and date, in that case there having been two conditions, that is, it is the employee may be a central government employee or the government employee, or the employee is other than the government employee. In case of the employee is having the central government employee, then the full amount is exempted under section 1010 in the gratuity. Okay, if the person, if the SAC is non government employee, in that case there is a two condition. That is a first one, that is covered by the payment of the gratuity act, and the another one that not covered by the payment of the gratuity act. Okay, if these gratuity is covered by the gratuity act, in that case actual amount received, whatever the actual amount received, or 20%, maximum limit is 20 lakh. Okay, 20 lakh, and 15 days the salary of each complete year services a part of in excess of a 6 month. So in this maximum exemption he is allowed, that is a 20 lakh rupees. Okay, if he is covered under the payment of the gratuity act. If he is not covered under the gratuity act, in that case the first two condition are same as per the gratuity act. Okay, the actual amount received and the 20 lakh. But third condition is going to be changed over here, that is a half a month salary each complete year is a service. Okay, so the half month salary of that employees each one completed the services, so this will be going to be taxable. Okay, uh so for the right answer for this question is option number 1, that is a gratuity received by the government employee is exempted from tax under the section, that is a 1010(1) of India of, that is yes, is the Indian Income Tax Act 1961. Yes, this is the first statement is true. The gratuity received by the local authority employee is exempted from the tax. This is also true. If this is local authority, is also comes under the government. Okay, so it's also true. Clear? Now let's move on to the next question, that is which is in your screen. The following is not taxable as income under the head of salary. Okay, so under the income in the head of the salary, which is not taxable. The option number first, that is commission received by the full time director. Free accommodation is given to an employee, allowances received by an employee, and remuneration received by the partner. You know that what is a salary? Salary means that there is a connection, there is a relation, there is a relationship between the employer and employee. Okay, if you earn the income, if there is a relationship between the employer and employee, so this earning is known as a salary. So salary is is comes under the head. Okay, now this salary is what the first statement is given, that commission received by full-time director. So the director is either is a employer or a employee. Okay, so it will come under the salary. Okay, free accommodation given to the employee. Yes, here is an employee word is used, so that is also comes under the salary. Okay, then the allowances received by an employee. Yes, allowances received by received by an employee is also we are covered under the salary. Now the remuneration received by the partner. The partner is not a is partner will not get a salary. Okay, they whatever the remuneration they were get, they are under the PGBP. Okay, under the head of the PGBP. So right answer over here, that is the option number D. So option number D is right answer here. Let's understand the format of the salary. Okay, so what is the comes under the salary? That is basic salary, pension, annuity, bonus. You have to keep in your mind all these things. Either they can ask the question from these area also. So the salary include the basic salary. Okay, pension also included in salary, annuity is also included in salary. Whatever the bonus is he will get, he also included in salary. Commission also, arrears of the salary is also included in the salary, and the advanced salary is also included in the salary, in the definition of the salary. Now what we add over here, we add a gratuity. Okay, just we have seen in the previous video, that is we have added over the gratuity over here. So gratuity is also comes under the head of the salary. Okay, we have to add it over here, then we will exempt it. Okay, now leave cash encashment, computation of the pension, allowances after the claiming, and the exemption if the under the section 10, if it is allowed, then we'll deduct this exemption. Clear? So after that, after getting the total of all these, we are deducting our exemption, and after that we added the value of prerequisite and the profit in addition to lieu of the salary, which is given under the section 17(2) and 3. Okay, we added this amount also, and we will get a total. After that, in the fourth step, the employer's contribution to RPF in excess of the 12 month. Okay, in case of RPF, you have to keep in mind that in case of RPF, interest would be charged 9.5%. Clear? In case of SPF, that means statutory provident fund, no tax in not taxable. Okay, and interest is also non-taxable. And after that, interest credited to RPF in excess of the notified amount, then we add the step 1, step 2, step 3, step 4 and step 5, then we will get a gross salary of a SSC. Then after that, we will deduct the allowed under the section 16. Here you have to keep in your mind that is exemption we are not going to be added over here. We are just excluding the exemption, and after that whatever the amount is balanced we will going to be add over here. Okay, but in the case of deduction we add all the amounts and after that we will get a deduction. Okay, so the standard deduction is given under this section is also important. Okay, you have to just learn these sections. You can keep in your mind that is standard deduction is given the under section 16 1A. Okay, then the entertainment allowances sorry, entertainment allowances is section 16.2 and the employment tax is given the 16.3. Okay, so first IA, that is standard deduction, entertainment allowance for the 16.2. Okay, then after by the employment tax is a 16.3. Okay, and after getting the total less this deduction we will get the income chargeable under the heads of the salary. Clear? So the section you have to recall these sections. Okay, these sections are important. That is standard deduction and the then the entertainment allowances and the employment tax. Okay, so these sections are important. Now, next question, exemption. Is questions of the exemption under the section 54F. Okay, 54F. So 54 is for the capital gain, ma'am. Okay, okay. This exemption is comes under the capital gain. Okay, because it is a 54 and 54 sections comes under the capital gain. You know that. Okay, of the Income Tax Act 1961 shall not be allowed if the SEC on the date of transfer owned. So first option is given, that is the first option is any residential house, any residence house which is let out there, a house which is self occupied and more than two residence house. So let's understand what the section 54F is about. So the right answer for this question is that is more than two residence house. Let's understand why it is option number 4. Okay, so let's understand this section which is exemption which is given in the capital gain in the that is a 54 EC 54F. Okay, so the exemption is claimed by who claimed this exemption. So in case of 54 is claimed by the individual and HUF. Okay, is also applicable to section 54F, that is individual and HUF. Okay, now what is about ES? Any person. There is no you know that there is a in the person's definition there are the 7 persons is given in this in by the income tax definition. Okay, so individual and HUF, and other than that any person. Okay, they any persons other than that not there was any person is included in the is eligible is claim this exemption. Okay, now you know that that is the section is for what the now the section 54 is for what. The section 54 is for the residential house property. Okay, is for the residential house property, and the section 54 EC is for the any long term asset. Okay, and section 54F is for the any long term asset other than residential house property. Okay, and here the 54F is for the long term. Okay, all because it is a capital gain, so here is for the long term. time limit for the acquiring the asset is in case of the residential house property which is given in the section 54. The purchase is a 1 year backward or the 2 year forward. Okay, or in case of either year 1 year backward or either 2 year forward, but in case of purchase. Okay, in case of construction, 3 year forward is applicable. Okay, now, in case of any long term capital acquiring the asset, the 6 month forward is the time limit. Okay, which is given in the section 54 EC. Now, the section 54 F is for the residential house property. Okay, so for the residential property, not house property is given in the 54, but any residential property. Okay, which is the, if in case of purchase, the 1 year backward, 2 year forward, same as the time limit is given in the section 54, and the construction is 3 year forward. Clear? So that's why the question is that exemption under the section 54F, okay, is for the any residential property of the Income Tax Act 1961 shall not be allowed if the assessee on the date of the transfer, that is more than two residential house. There is a limit is given in the in new amendment is was came, that is the two residential house is allowed. Okay, in case of SSC, and if suppose he has a three residential house, so two residential house is count under the capital gain. Okay, and which is exempted. Okay, and the one is comes under the capital gain. Okay, it's taxable. Okay, now next question, which among the following is correct statement about the residential status? So the first statement, a company can be classified as a non-ordinary residence and the company can never be classified as a non-ordinary residence. The company can be classified as a non-ordinary residence with the permission with the Ministry of Finance. And the fourth, that is, company can be classified as a non-ordinary residence with the permission with the Ministry of Commerce. So what is question? Question is talking about the correct statement. Okay, and is also talking is asking about the residential status of the company. Okay, you know that company is either be resident, okay, either be resident or either be non-resident. He is not categorized under the head of the NOR, not ordinary residence. The ordinary word is not applicable in case of the company. So according to this, a company can never be classified not ordinary residence. So option number 2 is right over here. Let's see. Yes, option number 2 is right over here. Let's understand the concept. Here you can see the the types of the company. If in case of the Indian company, okay, or in case of a non-Indian company, you know that Indian companies always be residents. There is no another things. Okay, there is no doubt about this. Now the non-Indian company, that is poem. What is poem, ma'am? So poem is place of effective management. Place of effective management. If it is place of effective management, it is in India, then it will the company is resident of India, and the place of effectiveness is outside the India, then it comes under the non-resident. So you have what you have learned in this. There is a two words is used, that's a residence and non-residence. Only two things. Okay. After that, the residential status of, let's understand the another things, that is a residential status of HUF. Okay. So there will be confusion. So let's understand the residential status of the HUF. If control and management of India totally or partially, okay, if the HUF, a Hindu undivided family, it is controlled and managed in India totally or partially. And second condition is if it is controlled and managed outside the India totally. If it is controlled and managed outside the India, in that case, what will happen? The HUF is non-residence. Clear? Now, what about the if it is controlled or managed partly or totally? So there are the two conditions. Again, they are resident. Okay, because they're controlled in the total in the India. So that was the resident. But now there's another thing, that if the karta is ROR, that means resident ordinary residence. Okay, so in that case HUF also RR. If the karta, because who handle, who going to be the handle the all the HUF, who is a karta? Karta is a prime member of the HUF. Okay, so the HUF, if the karta is ROR, the HUF is also ROR. Resident, ordinary resident. Understand? If the karta is not ordinary resident, in that case, HUF is also resident, not ordinary resident. Okay, but in case of company, because company having the individual body. Okay, so there are that's why there is a resident and ordinary, non-ordinary resident. But in case of HUF, it's depend on the karta. If karta is ROR, so HUF is also ROR. If the karta is NOR, in that case the HUF is also residence, not ordinary residence. Clear? Next question. Weber has rendered his services in India and retired in 2022. Then he shifted and settled in Singapore. Okay, he was retired and he was shifted to and settled in the Singapore. Shifted and settled. Okay, in the Singapore, outside in India. The pension received by him from such services would be deemed to be accrue or arise outside in India, deemed to be accrued or arise in India only when it is received in India, deemed to be accrue or arises in India only when received outside in India, and the fourth one, deemed to be accrue or arises in India. So what is happening over here? The pension received by him for such services would be deemed to be accrue or arises outside the India. So the option number 1 is right answer. Let's understand what is it. Any pension payable outside India to person residential permanently, because here living India permanently, because he shifted. The word is used, say shifted and settle. Shifted, okay, but what about the settle in Singapore? So what is this terms is about? The permanent outside. Okay, residency permanent outside in India shall be deemed to be accrued or arises outside the India. Any pension payable outside in India to the person resident permanently outside in India shall not be deemed, okay, to accrue or arises in India. Now, what is the deemed to be accrued or arises in India? First, that is a capital gain arises transfer of the property situated in India. In that case, income from the business connection in India. There is a connection in India, so it can, in that case also, the deemed to be accrued arises in India. Then income from the salary. Okay, in respect of the salary render in India. So it's also a deemed and accrue arises in India. Okay, then the salary received by Indian nation from the government of India in respect of the services rendered outside the India. However, the allowances and perquisites are exempted in this case. Now, the fifth one, income from any property. Okay, asset, other sources of income located in India. In this case, the all the whatever the sentence is given, all having in India, in India, in India, in India. Okay, that services rendered outside, however the prerequisite is exempted in this case. Okay, so it's talking the salary received by the Indian national from the government of India in respect of the service render in the outside, but what is given by whom? Is given by the government of India. Okay, is given by the government of India. So what is happening over here? So it is okay. Now the income from the any property asset or sources is located in India. Dividend paid by the Indian company. Okay, interest received by the government of India. So in all the cases, the income is deemed to be accrued or arises in India. Understand? Now let's understand the residential status. Okay, of an income, how the income is taxed. Now, if the income is received or deemed to be received in India, okay, deemed to be received and received, in that case, ROR, resident, ordinary residence is taxable. Not ordinary residence is also taxable, and the NRI, non-residence, is also taxable because income received or deemed to be received in India. That's why taxable to all these residential status. Okay, all the SSC, either he is a residential of India, either is ordinary residence, ordinary not resident, or the NRI. Now, income accrued and arises or deemed to be accrued arises in India. Now, the first statement is about the received. Here is accruing. The word is using accruing. In that case, the same thing is applicable to in case of the accrual, that is a taxable. Clear? Now, income accrue arises outside in India. Accrued and arises outside in India from the business control in the profession set up in India. Business, a person having a business outside the that is in the USA, but it is controlled by the India. Okay, so in that case, the ROIM is taxable, and NOR is also taxable, but NR, non-residence, is not taxable for this. Okay, income arises, accrued or arises outside India from the other income. In that case is also taxable, but is not taxable to not ordinary resident and the non-resident. Clear? Now, okay. Now the scope of the total income, section 50, the scope of the total income which is given in the section 5. You have to just keep in mind that is section 5 is for the scope of the total income. Okay, it's for the residential status. What is the scope of the income? Okay, so yes, for the income rises or accruing in India, so it is taxable in all head. Okay, in case of foreign, the from the business profession control or set up in India. Okay, so it is taxable to resident, ordinary resident, resident, non-ordinary resident, but not to the non-ordinary residents. And the from the business and profession control and set up outside in India, in that case it's applicable only and only to the resident or ordinary resident. It's not applicable to NOR and not applicable to the, not taxable to the non-resident. Clear? Now, arrange the following in the correct sequence. That is, the sequence, the statement is given: income under the different heads of income, deduct from the gross total income, adjustment of the losses of the current year and earlier year, and round up. Okay, so what we do, we have, first of all, we have to do, that is income under the different heads of income. Okay, we collect the income from the different heads of the income, and we will get the total of this, all the, okay, all the income. Now after that, if we have any kind of losses, we adjust that losses. Okay, so adjust the losses, this is the second step. Then after the getting our gross total income, we will deduct our deduct from the gross total income, and after that we're calculating our taxes, and in case of any round up, just the we will round up our taxable income. That is a 4 step. So here is A, C, B, D. So the option number 4 is right answer here. Clear? Now, let's understand that is the steps of the income tax liability. First steps, they determine the residential status. Second step, classify the income under the different heads, which is given in the chapter 4. Clear? After that, exempted income, in case of any exempted income which is given in the chapter 3, we have to specify that. And after the fourth step is compute the income from under the each head which is given in the section under section 4. Okay, sorry, chapter 4. Now after that, we're clubbing all the heads of the income in the chapter 5. Okay, so this chapter is also important. Okay, now after that, we are set off or carry forward our losses which is in the given the section 60. That is the section is 60 to, it's clubbing for the income. 60 to 74 is for the clubbing of the income. And then compute the gross total income under the section 80B. Okay, that is chapter 4A. And after that, in the step number 8, they deduct the gross total income. Okay, one thing is that for the set off and carry forward, the section is given that is 70 to 80. Okay, 70 to 80. And the computer tax, and after that, after the A step, deduction of the gross total income, that is chapter 6A, which is the sections is given 80C to 80U. 9th step, to compute the total income, section 245, chapter 6A. And after that, application of the rate of taxes on the total income. Okay, and after that, the step number 11, if we have any the surcharge for only domestic and the foreign company. Okay, the surcharge is applicable only to the domestic and the foreign company. After that, education says, second higher education says of the income tax will be applied. Then advanced tax or tax deducted at source, which is given in the chapter. Okay, after that, return of the income, that is section 139. Okay, and after post return, the assessment, interest, penalty, refund, recovery, this all the procedure. Okay, one more thing that is important for the subject to the marginal relief is allowed only where to tax payable together with the surcharge exceed the income earned by the assessee in excess of the 1 crore. Okay, so in that case, marginal relief is given by the authority to the assessee. Okay, clear? Now, next question, that is additional surcharge, health and education says of 4% is payable in, just we discussed over here, that is income tax plus surcharge. Okay, income tax plus surcharge. So what is we have discussed, that is the education says 4% we have added over here in case of total taxable applicable rate, whatever the rate we have applied in the total income. After that, we add a surcharge, and after that we add a education says. Okay, clear? Now next question in your screen, that is a match the pair is given. So the list number 1, that is type of income is given, and the list number 2, that is head of income. Okay, so salary, bonus, commission, etc received by a working partner of the firm. You have just when you read the question, the salary, bonus come, yes ma'am, the salary bonus is comes under the salary head. No, after that, what is he say, that is a partner from the firm, so it comes under the business and professions. Okay, so the first 4. Okay, after that, pension received by widow of a government employee gain, so it comes under the section, that is income from the other sources. Okay, so there, 1, the profit on sale of machinery and use in the business, it is nothing but it is a short term capital, because we are selling our machinery in the very short term, so it is a short term capital gain. That is 2. Compensation received from the government, a compulsory acquisition of land or profit on, so it is nothing but it is income from the capital gain. So 3. So according 4, 1, 2, 3. The 4, 1, the option number 1 is right over here. Let's check. Yes. Now let's understand the what is the here the income heads is given, and the chapter is also given. The salary is comes under the chapter 4A. Okay, section which is included in the salary, that is 15 to 17. Okay, 15 to 17. Okay, and after that, HP house property, which is given the chapter 4C. What? 4C, and the section which is included 22 to 27. Then the business and profession, PGPP for 4D, which is 28 to 44D. Clear? After that, capital gain 4E, that is 45 to 55. Okay, and the other sources is the 4F. Okay, other sources 56 to 59. Clear? So you have to just keep in your mind this section, because it's also important for the salary 15 to 17, HP 22 to 27, and the business 28 to 48, and the capital gain for 45 to 55, and after that 56 to 59 is for the other sources. Clear? So these all you have to just read this. Now, next question: an individual is said to be a resident in India. So the for the residential status, the section 66 is given. The residential status is divided in two parts, that is the residence and non-ordinary residence. In case of non-ordinary residence, there is no things, but for the residence, there are the two conditions are given. One condition, that is the assessee must be live in India 180 days or more in the previous year, or the 60 days initially in previous year, or plus 365 or more day in the last 4 years. So if we fulfill this condition, then he will move to the ordinary residence. If it clear that he is the person is the SSC is resident, then we will see the is it a person is a residence, ordinary residence. So in case of ordinary residence, he must to fulfill the two condition at the same time. Okay, so residents of India at least 2 out of 10, what I said, 2 out of 10 in previous year, and the 730 days and more from last 7 year. Clear? So what is question is about the statement one. It is an India in the previous year for the period of 828 182 days or more. Yes, this is true, ma'am. And after that, it is India for the period 60 days or more during the previous year, and 365 days more during the 4 year immediately preceding previous year. So yes, both are the condition, both are the statements are true. So the option number C is correct over here. Okay, so here is the residential status is given in the chart. So the basic condition, the section is given, that is section in the under the section number section 6, the residential status of the individual is given. Okay, now what are the condition they have to fulfill? Yes, the 182 days in the previous year and 60, and and also at least 365 days in the last 4 year immediate preceding year. If he is like exception, this condition is exception to exception to the person who is a Indian citizen, leave the India for the purpose of employment, or leave the India as a crew member Indian ship. Okay, so this condition is not applicable to this kind of person. Another, that is a Indian citizen or the person of the Indian origin comes in India on the visiting from the outside. Okay, it's come for the only just visiting to the India. So in that case, as per the explanation, the 115 C, a person said to be an Indian origin if he himself or his parents, grandparents are born in the undivided India. Okay, and check the date of the birth should be before 15th of August 1947, and place of birth is India. Okay, Bangladesh or Pakistan. Yeah. Now after he is confirmed that he is a resident of India, then the additional condition he has to fulfill, that is 2 at least 10 days and 730 days at least 7 years immediately. Okay. Now, next question, that is an individual is residence and ordinary residence of India if statement 1, that is a person has been resident in India at least 2 out of 10 previous year immediately preceding the relevant previous year. B, the person have been in India for the period of 730 days or more during the 7 years immediately preceding the relevant year. So yes, ma'am, option number C is right answer over. We just in the previous slide we discussed this point as a additional conditions of having the residence of India. Okay. So thank you so much. We have completed here near about 10 to 12 questions over here. We will submit you soon. And